Hi, this is Miles from Milestone Investing, and I'm going to do a quick update market review on what's happening. The time is now 10:30 on the 26th of May, 2023. Now, this is the newsletter market intelligence report for the 25th of May. And the candidates that were paying dividends this week, well, there were 6 of them: Kingfisher, Whitbread, Coca-Cola, the bottling plant in Switzerland, DCC, Intertech Group, and Imperial Brands. Collectively, they are promising to pay a dividend equivalent to 956 million. That represents 1.8%, 1.9% of the total value of those respective companies. Okay, so now that I've given you the big picture, we know that these were the numbers that we could have expected in terms of derivative yields and in terms of dividend yields. Okay, so let's just quickly jump down to the summary. We want to just make it real quick. Here's our summary. And our summary says that we are expecting Whitbread to be good for long traders. And so far, the average in the last 3 years had a 1-day recovery. 68% of the time in the last 11 years, this trade was good for long traders. Now, if we're going to be leaning towards being long, we want the short performance to be rubbish. Okay, and we can see that short traders did well 11% of the time on day 0, which is Thursday, and 16% of the time day 1 on Friday, which is today. And then if we look at who was the best performer for going short historically, we've got highlighted here at 61% Imperial Brands. And again, if you're going to go for a number at a high relative return here, you want this number to be in excess of a week, 24 days is the average recovery. And you also want this number to be very poor performance on the long side, which, as you can see, this is the poorest performance long side along amongst this lot. So we've got 61% here with a very poor long performance. You can see this one is 64%, which is higher, but the performance on the long side could threaten to actually undermine your short trade, because 50% of the time this does well. So 50% of the time this could mess up your short trade. In this case, only 29% of the time did this have the ability to mess up your short trade. So that's why we lent towards Imperial Brands. So we can look at 2 of them. We look at what happened so far with Whitbread, which we said was a good for going long, and for Imperial Brands, we said was good for going short. Let's have a look at those 2. To give us the backdrop of what's going on in the market, we need to look at the FTSE 100 to find out what is the temperature of the market generally. So this was Wednesday, this is Thursday, this is Friday. Let me just do a quick line, so we just kind of see. I'm gonna just do a little line here. So this is the opening, and this is the closing price. I'm also going to make it fat. There we go. Like that. Okay, so the general market on Wednesday down. Let's do the same thing for Thursday. Market opened here. Market closed here. Again down. And so far, we're down. But this was down, up, and then there. And this was down and then stayed there until it came back up again. So this one was a bit more extreme than this one. At least it was pivoting around that central line there. All right, so now that we know we had a kind of bearish day Wednesday and a bearish less bearish day on the Thursday. Let's have a look at our individual stock. We said, let's look at Whitbread. All right. So Whitbread had a qualification date of on Wednesday. The share price on that day was falling on the Wednesday. And then it kind of bounced back up again. And then when it went ex-dividend, it fell. And it fell into the bullish drop zone. It didn't go as far as the bearish drop zone. Hit that, hit the floor and bounced up. Okay. And it came up to here. Now, let me just quickly show you how high it actually went. So I'm going to do a line here, this candlestick. And so we don't get confused, I'm going to make it dotted. Okay, so basically anyone who came in, went long from and got a dividend from this point downwards, from here to here, everybody got the opportunity on Thursday to basically sell the shares, take the money back, and walk away with that dividend. Thank you very much. Anyone up here in this range did not have that opportunity, and that's because we had that downward pressure on the FTSE 100 generally. But despite that downward pressure, Whitbread, you know, did its best to reward the majority of the shareholders who went long. All right. What about, we said, Imperial Brands? What did they do? Imperial Brands was trading between this range and this range. The drop zone is here, and they went right through drop zone. It done an about face, went into the drop zone, didn't quite fancy the high elevation, and it just kept on falling. And like I said, there was a downward pressure on the FTSE 100, which accounts for this downward pressure, but it's kept on going down. So this one was great for short traders. The other was great for long traders. Let's do an order and pretend that we bought this trade. Let's just make it up. And let's say, so we're going to do a price level of about, it was about here on the Thursday. So this price is at 17, let's make it 17.90. Keep it simple. So we're going to do an order there, and we're going to do a size. Now let's pretend we've got a 10 grand fund. So if we've got a 10 grand fund, we're expecting to put in a third of that. So our margin should be in the range of 3,300, yeah? So we're going to look down here and make this number 3,300. Okay, so we're in the 3,300 range. Okay, so that's kind of about right. Now, with that in mind, let's find out how much money we made at the base of the drop zone. We made 300, right? And on a £3,000 exposure, that's a 10% return in the space of what, 15 minutes. And if we take it to the let's say the closing price of yesterday, of Thursday, right here, we would have made £600, which is a 20% return. So here was 10% and here was 20%. And as you can see, it's even lower. So you've made more than 20% in the space of basically one day. One day. That's Imperial Brands. Let's do the same for Whitbread. Whitbread. We bring that back up again. It hit the floor here, and so we can either say we want to go from, but let's do it now on order. I don't want to go right to the floor because, someone might say, yeah, but you're just cheating, mate. Right, so we know the drop zone was, this is the ceiling, this is the floor. Let's go in the middle, somewhere in the middle. And so that middle is 3213. Let's go there. 3213, middle of our drop zone. And again, we've got a 10,000 fund. So we're going to, again, have a margin equivalent to 3,300 here. That's close enough. 3,200. Okay. And in this case, we want to know what had we sold it, let's say, at the closing point of yesterday. We would have made 3,800 on a value of 3,000. Again, we made 10% on our margin, on our exposure. Okay. In terms of the whole fund, and that was in the space of also one day, because we would have come in and our trade would have been somewhere in the middle, and so that trade would have been triggered around here, and then we would have closed that. So basically one day. On the, was that 3,800, 3,800, 385. If I divide that by the 10,000 fund, we're talking about making a 3.8% return on that fund, okay, for after one day, or it would have been a 10% return on the fund on the trade. So 10% based on that, 3%, 3.8% based on the full fund, okay? And that's basically the story for Whitbread. Now, and that's also in Monday. And that's how the market has done so far on by 10:40 on the 26th of May, 2023. That's all for now. This is Miles from Milestone Investing. Happy trading.